Hi dear students, this is Raju sir, subject of commerce, and so last two classes we discussed about the information, the basic information about the final accounts of the business concern. So in this today's class, we are going to discuss about some more additional information regarding to this final accounts. Okay, right, let's see. So what is the chapter we are discussing? Is we know that preparation of final accounts with adjustments with adjustments. Yes. So in the last classes we discussed about the importance of the final accounts and stages of the final accounts and the proformas of the trading account, profit and loss account and balance sheet. Today in this class we are going to discuss about adjustments. Okay, right. What is the meaning of adjustments? Actually, adjustments is the transactions. The meaning of adjustments here, adjustments is the transactions relating to the current accounting year, relating to the current accounting year, relating to the current accounting year, but not recorded in account books. Account books means books of accounts means nothing but this is trial balance. Okay, so adjustments is the transactions relating to the current accounting year but not recorded in the account books are known as adjustments. Actually, while the final accounts are preparing by an accountant, some transactions of the business which is not able to record in the trial balance, those all transactions recorded as adjustments in the account books. Okay, in the account books, so that is to be called as adjustments. So adjustments it will have the dual effect in the accounting process, dual effect in the account books. Okay, dual effect in the account books means it will be treated, okay, it will be recorded two times in the final accounts. So if any adjustment is given in the problem, so that adjustment impact is two times in the final accounts, two times, and it will be recorded in the final accounts two times. Okay, right. So this is about adjustment. Actually, these kind of adjustments are the information which is not able to record in the account books. That information is to be recorded by an accountant as an adjustment in the final accounts. Okay, actually we have here 12 adjustments, nearly 12 to 14 adjustments are there. It is to be properly to be taken place into the business, nearly 12 to 14 adjustments are there. But according to 2021 academic year, as per Telangana Intermediate Board, so we have only 6 adjustments are most important in the year to 21-22 academic year. Due to pandemic, actually the adjustments are to be reduced from 14 to 16, sorry 6, 14 to 6. So okay, in this class I am going to discuss about these 6 adjustments properly. So remaining adjustments, so we discuss in the next class. Okay, now we discuss in the definitely in the next class. But as per the present situation, so which is important is there. So those only I explain. Okay, right. Let's see. Let's move to the adjustments. What are the proper adjustments? Yes, the adjustments are adjustments in these. The first adjustment here, closing stock. The first adjustment here, closing stock. So already we discussed, okay, na? Every adjustment impact effect in the final accounts, it will be twice. It will be dual. So every adjustment we have to record in the final accounts two times. Two times we have to record, right? So what is actually in case the closing stock is actually given in the adjustment. So where it can be recorded, where it can be recorded. Actually, it can be recorded twice. It can be recorded twice. Where it is actually before that, we have to know the meaning of closing stock. Closing stock means the stock which is to be unsold at the end of one accounting year. The closing stock means nothing but the stock which is unsold at the end of accounting year, that is to be called as closing stock. Okay, so closing stock is valuated by accountant at the end of December 31st or March 31st. So that's why, so after the value the closing stock, it can be recorded as an adjustment. Okay, right. So when it has in the adjustment, when the closing stock has in the adjustment, where it can be recorded, actually the first it can be recorded trading account credit side. Trading account of credit side one time, and the second time balance sheet asset side, right? Two times, very simple. When the closing stock is given in the adjustment, it could be recorded trading account credit side and balance sheet asset side. Yes, that is about the closing stock, the first adjustment. And the second one, outstanding expenses. Outstanding expenses, right? Yes, the meaning of outstanding expenses, the expenses which belongs to current year but which is payable in the next year, next accounting year. Actually the expenses belongs to concern to current accounting year, but it will be paid in the next accounting year. Those expenses are to be called as outstanding expenses. Actually accountancy records current year account information in the current year books, next year accounting information in the next year accountancy books. So that's why, but this is the expenditure which belongs to current year, but it will be paid in the future, in the next accounting year. That's why these kind of expenses are to be called as outstanding expenses. Yes, when the outstanding expenses is given in the adjustments, right? What we have to do, right? Let's see. Expenses. Actually, expenses are part of the business. To the expenses, expenses, add to the expenses. When outstanding is given to the expenses, it could be add. And second time in balance sheet, it could be on liability side. Okay, I am mentioning the shortcut way. Okay, trading account closing stock, trading account credit side, balance sheet asset side, and outstanding expenses. If anything is given in the adjustments, it could be added to the expenses, and next time, second time, it could be recorded on balance sheet liability side. Next, third adjustment, right? Prepaid expenses. Prepaid expenses, right? The expenses, the meaning of prepaid expenses is nothing but the expenses which belongs to next year but paid in current year. Next year expenses also paid in current year. Next year expenses recorded in next year account books, but they already paid in advance now. So when the expenses paid in advance, when the businessman expenses paid in advance, those expenses called as prepaid expenses. Okay, in case if any prepaid expenses is given in the question, so what is the treatment? The treatment of adjustment is how it is. Let's see, to the expenses, from the expenses it could be deduct prepaid expenses, deduct from the concerned expenses first, and second, in the balance sheet asset side, in the balance sheet it could be recorded on asset side. Okay, right. This is about the prepaid expenses. Okay, we completed the 3 adjustments. Yes guys, let's come to the 4th adjustment now. Right, 4th adjustment, bad debts. Yes, bad debts. Yes, actually what is the meaning of bad debts? We have to know about regarding to the bad debts. Okay, let's see. I'm going to explain about what is the bad debts and what is the related information to the bad debts in the problem. Let me explain now. Let's see. Actually in the business, the debtors are playing some important role. What is the meaning of debtor? A person who owes to the business. A person who owes to the business is called as debtor or debitor. A person who owes to the business is called as debtor. Means a person who due to the business is called as debtor. Okay, debtors are part of the business. When the businessman do some credit sales, so when the businessman make the credit sales to the customers, those all customers are called as debtors. Suppose what is the example? Goods sold to Raju. Yes, on credit. Raju is the debtor. Goods sold to Raju on credit. Raju is the debtor. Next, sold goods to Swati on credit. Means Swati is the debtor. Because of we are selling the goods to the customers without receiving the money, without receiving the benefit we are giving. We are giving to the benefit to the customers without receiving any benefit. That's why those persons are to be treated as debtors of the business. Okay, yes, we knew the meaning of debtors now. Let's see. In these debtors, actually, we have the 3 types of debtors are part of the business. Okay, right. What are the types of debtors here? The debtors are good debtors, doubtful debtors, and bad debtors. Bad debtors. Right. So we have the 3 types of debtors. Debtors good means who keeps their promise and who pay the money within time, and when he make the promise, as per the promise, he pay back the amount to the businessman. So those debtors are to be called as good debtors. With these good debtors, actually there is no problem to the businessman. Then next one, doubtful. As to the businessman point of view, some of the debtors, they are maybe doubtful, means they may or may not be collect the amount from the debtors. The businessman, when he may or may not be collect the amount from the debtors, is called as doubtful debtors. Then bad debtors. Bad means the amount which is not collecting, irrecoverable. The amount which is irrecoverable from the debtors. The amount which is irrecoverable from the debtors is called as bad debts. Bad debts. Yes. Or may not be. May or may not be collected. That is to be called as doubtful. Good means yes, it definitely collect from the debtors. Okay. So to the debtors, we have the three types: good debtors, doubtful debtors, bad debtors. Okay. Now, the businessman, as per the realization concept, this is one of the accounting concept. So the businessman should record these doubtful debts as a loss into the account books. Bad debts also loss, it could be also recorded as loss into the accountancy books. Okay, so bad debtors, bad debts is the loss to the business or to the businessman. So that's why. So we are discussing about bad debts now here. So when the bad debts is given in the adjustment, it could be recorded on two times. One is profit and loss account, debit side, and in balance sheet, debtors is the asset. Okay, so in the balance sheet, deduct from the debtors on the asset side. Profit and loss account debit side, first we have to write one time, and the second time it could be recorded on balance sheet, deduct from the debtors on the asset side of the balance sheet. Yes, that is the point of bad debts. I hope everyone understand the concept of the bad debts. Yes, come down to the next. Yes, we discuss this provision for bad debts, provision for doubtful debts, reserve for bad debts, reserve or provision, for doubtful debts. Yes, the businessman also may not actually, he estimated in the debtors, some of the debtors who are looking some doubtful, he recorded as a loss, into the books. In future, if any amount is collected from the same debtors, he should be cancelled that loss properly in the books. Until then, the businessman recorded as a loss and maintain one provision and maintain for one reserve for this doubtful debts. So when the amount is collecting from the debtors, the provision is going to be cancelled. The reserve is going to be cancelled. The doubtful debts is going to be cancelled. In case if there is no amount is collected, that has been finally treated as a loss and is to be mentioned in the recorded in the accountancy books also as a loss. Okay, so when the reserve for bad debts is given in the trial balance, what is the treatment? Same, it is the loss. Yes, it could be loss. First, the businessman actually consider, as per the realization concept, he should consider all anticipated losses. According to this, the doubtful debts is also he treated as loss only, not profit. So it has been recorded as profit and loss account, debit side, and balance sheet, deduct from the debtors, on the asset side, Yes, okay, right. Let's actually we successfully the completed the 5 adjustments. Okay, right. Sometimes when the reserve for bad debts is given in the trial balance also, suppose actually we discussed here regarding to adjustments. When these all the contents are given in the adjustment, what is the accounting treatment we discussing now? So in case these all the contents, if it is given in the trial balance, actually we divided the contents of the accounting information inside of the trial balance, outside of the trial balance. Inside of the trial balance, it could be recorded only one time in the final accounts. Inside, whatever the inside information of the trial balance, it could be recorded only one time in the final accounts. When it has outside of the trial balance, means that is to be called as adjustments. That is called as nothing but adjustments. When the outside information of the trial balance, it could be recorded on twice in the final accounts. Okay, right. Okay, when it is inside and outside, and when it is comes into the problem, I explain very clear. Now come down to the sixth one, sixth adjustment. Sixth adjustment, depreciation. Depreciation. Yes. Let me explain the meaning of the definition of depreciation. In simple meaning, the definition is loss of quality, loss of quantity, loss of value of an asset. An asset is called as depreciation. Is called as depreciation. Means actually assets are part of the business, especially tangible or fixed assets like furniture, machinery, motor van, like this. So while the businessman using these assets continuously in the business, and naturally, generally, automatically, the assets may lose its quality, may lose its quantity, and lose its value. When the property lost its quality, lost its quantity, lost its value, that is to be called as depreciation. Yes, the furniture, the machinery is the part of the business. While the businessman using these assets continuously in the business, automatically the assets may lose its quality, quantity, value. When the assets lost its quality, quantity, value, that is to be called depreciation. So this has been lost. This is the loss. So loss could be recorded twice when it has given in the adjustments. First one, profit and loss account. First, it is showing in the profit and loss account debit side. All the losses are debit. Profit and loss account debit side. Next, in balance sheet, deduct from the concern asset. Deduct from the concern asset. Okay, profit and loss account debit side, and balance sheet deduct from the concern asset on the asset side of the balance sheet. Yes. As per the situation of the 21-22 academic Telangana Board Intermediate Education, whatever the adjustments are important. Yes, I explain, can be discussed that adjustments properly in this class. Okay, na? Right. What are the adjustments? Right. Let's see. Adjustment meaning already we discussed here. Adjustments is the transactions relating to the current accounting year but not recorded in account books are known as adjustments. Adjustments, it will dual effect in the account books, means it will be recorded twice in the account books, final accounts. Right. Actually, nearly we have the 14 adjustments, but as per the pandemic situation, pandemic syllabus, the adjustments are reduced from 14 to 6 now. I am explaining in this class only regarding to these 6 adjustments only properly. Okay, na? To able to understand to all the students. That's why I explained about only 6 adjustments. Definitely, I explain the 14 adjustments in the next classes. Okay, na? Right. What is the important for this situation? Those all I explained in this class now. Okay, 6 adjustments: closing stock, outstanding expenses, prepaid expenses, bad debts, and reserve or provision for doubtful debts. And next one is the depreciation. Okay, these 6 adjustments properly important for annual or public examinations of Telangana Intermediate Board. Okay, I hope you all understand about these adjustments. I hope you understand about these adjustments. In the next class, we discuss one problem along with these adjustments. In one problem we will definitely discuss. Thank you for watching this video. Okay, see you in the next class. Take care, stay safe. Okay, bye.